Hi, welcome to Trading with TK, teaching you to turn ideas into money. This is a weekend question and answer period where I try to answer some questions that have been sent in by some of my readers. So let's get started. Some of these questions today actually I have answered many times in personal emails, and they're more or less like frequently asked questions, and so I thought it would probably be smart if I just answered them in this video, and then if I get asked the question again, I will refer them to the video, because I get asked some of these questions many times. Okay, the first question comes from Tom, and Tom says, thanks for the daily videos. On Thursday, Bill Gross made a statement that the world is deleveraging. I'd like to hear more about what this means and what the implications might be. Well, first, in case you don't know who Bill Gross is, he's the big bond fund manager, very well known to bond people. He's been around a long time and considered to be astute and somewhat successful. Now, it's not my area of expertise. I'm a stock guy. He's a bond guy. But in the world of stocks, what deleveraging means is, well, let's describe what leveraging is first of all. Leveraging is when you're buying an investment on partially borrowed money. Now, to the average investor, margin rates are 50%. So if you buy a $10 stock, you only really have to have enough money in your account as if you're buying a $5 stock. But if that stock starts to decline, you're going to have to put up more money. Okay, so that's what leveraging is. Now, the specialist system, when I was on the floor, we had a 4-to-1 ratio. So if we had $100 million in capital up in the firm, we had buying power of $400 million. Okay. And on that Tuesday of, on that Monday of the 87 crash, we had no buying power left. We were 4-to-1 on the long side. It was a scary day. But anyway, buying houses leveraged up. You buy $1 million house, you only have to put up $100 grand. I mean, it's huge leveraging, huge risk. That the investment, if you're not buying these investments at the bottom, and these investments are going to go straight up, you can find yourself in huge trouble. And that's what's happened in this market, in the housing market. It happens in the stock market all the time. Every time you get over leveraged, it comes tumbling down. And what's going on now is people are deleveraging, meaning that they're being forced to sell. They may be selling on their own decision, but usually it's a margin call that you're getting and you're being forced to sell. The foreclosures in the housing market is basically a huge margin call. These people bought houses that they couldn't afford on borrowed money, and now they can't pay it back, so they're being foreclosed. That's what leveraging is. And the deleveraging is what's going on, is now that everything's come crashing down. You know, it's always caused all big downturns in all these investment vehicles since the 29 crash. You know, in 29, you only had to put up 10% of any investments, and that's what led to one of the factors that led to the big crack in 29 is that the margin was too loose, and it all comes tumbling down. It happens time and time, every cycle. Every time we have a major break, it's always about over leveraging. Anyway, that's my take on it. And Bill is right. We are deleveraging, but we're being forced to deleverage because we can't pay back the money, so they're taking our assets away from us. Okay, I hope that answers the question. That is not one of the most frequently asked questions, but the rest of them that we're going to address right now are. Next question comes from Dan. Dan says, he has two questions. The first question is, now that I'm wondering what will happen to GGC and DTG, which are two of our positions, with this new downturn, is it possible for them to continue up? Yes, it is possible for these stocks to continue up. As a matter of fact, I believe GTC has continued up. But if the downturn continues and it gets deeper and more intense as time goes by, even these stocks that are acting really well right now will eventually succumb to the downturn. What's going on now is that the downturn is just beginning, so that these stocks that are in these nice uptrends are still continuing their uptrends. But if the downturn gets more serious and more prolonged, just about every stock succumbs to it eventually. The other question is, I have a simple question: where do you find these triangles? Okay, this is a very common question I get. How do I go about finding these stocks? Do I have scans? Do I have, programs? No, I don't have any of these things. I have a list of about 500 stocks that I've put together over a long period of time that I look at 2 or 3 times a day. And as I see these patterns developing, I pick them out with my eyeballs. It's just there's no magic button, no scan. It's just old-fashioned detective work, and just following these 500 stocks every day. And that's basically how I do it. Okay, that's a commonly asked question. The next question comes in from Zach. And Zach writes, I think I remember you saying you choose stocks that have a daily average volume of no less than 400,000 shares. Good memory. And not more than $10 in price. Well, that's not always true, because the short side I usually get up to as high as $20. What is the maximum account size you would use to buy 10 or 15 stocks? For example, if you have $100,000, would you intend to hold 10 stocks? That would mean $10,000 in each stock. With a stock like BBX, which is around $2 right now, that would mean you'd be holding 5,000 shares of the stock. Okay, I think what Zach is asking me is, how do I allocate my capital into each one of these positions? Okay, and this is a commonly asked question. I answer this question many, many times. Okay, and I don't have any real hard, fast rule, but my size of my position is based on 2 factors. Okay, number one, the daily average volume of the stock, and the price of the stock. For instance, you take a low price stock of $1 or $2 and it trades 2 or 3 million shares a day. A 10,000 share position is not a large position, and sometimes I do take 10,000 share positions as long as the volume is there. Okay, in the case of BBX, it trades like some days it trades 300,000. Other days it can trade 800,000. So 5,000 shares would be too much for my risk reward ratio. I'd be more in the area of 2,000 to 3,000 shares in a stock like that. So it all depends on the volume of the stock and how high priced the stock is. So I don't have any hard, fast rules. The only hard, fast rules I have about this is that I never want to put too many eggs in one basket, whether it's the size of the position or the money amount, either or. Never put too many eggs in one basket, and I never want to put myself in a position where I'm possibly could even get a margin call, because that's disastrous. Those are my 2 hard, fast rules. So this question's asked many, many times. It all depends on the volume of the stock and the price of the stock. And I can buy anywhere from 2,000 to 10,000 shares of these investments. He wants to know if I lag in or if I come in all at one time. I like to either buy them all in one shot and sell them all at one shot. And when I'm out of the stock, even though it continues up, the trade is over and I move on. I don't try to say, oh, I left some on the table, maybe I should buy it back. Once I'm in, I'm in. Once I'm out, I am out, and then I'm moving on to something else. The stock will, it'll stay in my 500 watch list, but the chances of me playing it again anytime soon are remote. It may happen, but the pattern has to be there for me to buy them back again. Most stocks make these moves 2 or 3 times a year, and that's about it for most stocks. So that's another frequently asked question. Okay, next question comes in from Brad. wants to know what software I use. Okay, I use Warden Brothers TC2000 Telechart. It's fabulous. I can look at stocks from a 1 day up to a 9 day time frame. It's versatile. It's very dependable. I recommend it. It's real time, and I can't say anything more about TC2000 than that. Okay, so I think my time is running out, and that's it for our weekend question and answer. I hope I've been helpful, and until Monday, this is TK signing off.